Good day, everyone. Today I'm speaking on behalf of myself, Nia Morris, and my fellow Group 1 members, Brittany Brennan, DeAndre Johnson, and Latika Smith, presenting a comprehensive financial analysis of Commonwealth Bank Limited, one of the most recognized and profitable financial institutions in the Bahamas. Our presentation will analyze and recognize the bank's background, leadership, governance structure, industry position, financial performance, and investment potential. We'll conclude with a recommendation based on our valuation analysis and the overall financial outlook of the company. This presentation is intended to give you a complete understanding of the bank's standing in the industry and whether or not it's a wise investment today.
Here we have our table of contents where we'll get a quick overview of what we'll cover today, which is company overview, economic climate, industry analysis, financial analysis, recommendations for both the company and the investor, and then we'll conclude. Company overview. Commonwealth Bank, founded in 1960 in Nassau, Bahamas, is 100% Bahamian owned. It operates 12 branches across the country and focuses heavily on retail banking. This includes consumer loans, savings, and fixed deposit accounts, and online services. What sets CBL apart is its ability to consistently generate profit, even in a relatively small market. A fun fact is it was one of the first Bahamian banks to introduce smart ATMs to the Family Islands. Corporate governance. CBL operates under a strong governance framework regulated by the Central Bank of the Bahamas. The board includes both executive and independent non executive directors to ensure a balanced decision making. The roles of the chair and CEO are separate to ensure clear accountability. There are five main committees: audit, risk, credit, compliance, asset liability, also known as ALCO. Annual reviews ensure directors are qualified and ethical. Internal audit and compliance departments report directly to the board, which supports transparency and also integrity. Executive Leadership Overview. The leadership team is experienced and forward thinking. William B. Sands Jr., Executive Chairman, brings historical knowledge and financial discipline. Denise Turnquest, who is the President and CEO, is the first woman in this role and has driven modernization and improved customer experience. Next, we have Tangela Aubrey, who is the CFO and manages financial planning with accuracy and focus. Lastly, we have Sean Brathwaite, who is the COO, who ensures smooth operation and service quality. Together, this team balance experience with innovation, keeping the bank competitive. Economic climate. The Bahamian economy is recovering from COVID-19, but at a slow pace. Real GDP is expected to grow by 1.5 to 1.9%, signaling cautious optimism. However, reliance on tourism remains a risk, especially in the face of hurricane, global unrest, and future pandemics. Inflation has been inconsistent, which impacts both spending and saving. For banks, this means tighter margins, cautious lending, and more financial risk exposure. Here are the consequences we have of economic development. The economic conditions create specific risk, which are slower GDP growth means reduced loan demand, shocks in tourism can lower household income and raise default risk, inflation may shrink consumer savings and increase delinquencies. Hurricanes may destroy loan collaterals, and insurance costs are rising, which may make borrowing harder. Commonwealth Bank Limited must consistently adapt its lending and risk strategies to stay resilient. Industry analysis. First, we'll start off by what is industry analysis? It's important to define industry analysis. The process involves examining the environment a business operates in, looking at competition, regulations, trends, and technological changes. For investors, it's essential to understand not just how a company performs, but how it fits into the bigger picture. Commonwealth Bank competes in a stable but evolving sector alongside Bank of the Bahamas, CIBC, and Fidelity. There are growing pressures from regulators, particularly around compliances and anti-money laundering and ESG standards. Meanwhile, fintech firms are gaining ground by offering faster and cheaper services. Commonwealth Bank Limited's future success will depend on modernization technology whilst continuing to excel in customer service and risk management. Here we have a SWOT analysis that we took on Commonwealth Bank Limited, which shows that the strengths are strong reputation for consistent profits, high customer trust and loyalty, and reliable in managing risk. For weaknesses, we have heavy reliance on the domestic market, outdated legacy system could limit scalability. The strength provides a solid foundation, whilst the weaknesses suggest that improvements needs to be made. For opportunities, we have invest in mobile and digital services, improve ESG practices to attract impact investors, and expand lending to small business or green initiatives. For threats, we have extreme weather events and climate change, natural disasters such as hurricanes, rising competition from global banks and fintech firms. These insights identify where Commonwealth Bank can grow and what it needs to do to be guarded against. Here we have the statement of cash flow. In 2024, Commonwealth Bank posted 85.9 million in net income. The bank has low delinquencies, excellent loan recovery, and keeps costs under control. Dividends remains generous, reflecting its commitment to shareholders. Liquidity and solidity remains strong, and operating efficiency is high, which makes Commonwealth one of the most dependable financial performers in the country. Here we have the cash operating activities, cash from investing activities, and also cash from financial activities. As you can see, the operating cash flow is positive and supports daily business and lending. The investing cash flow focuses on digital and physical infrastructure, and the financial cash flow includes dividends payments and buybacks. The cash position supports both growth and investors' returns. Here we have the profitability ratio analysis. As you can see, the return on equity is 21.24%, showing a strong return on investors' capital. Net profit margins reflects good expenses control and solid lending. Return on assets shows effective use of assets to generate income. All three ratios signal strong performance. Solvency and liquidity ratio analysis. Commonwealth Bank Limited maintains conservative, safe, and liquidity practices. It has a healthy loan to deposit ratio and enough assets to meet all obligations. This keeps the bank stable in tough times. Leverage ratio analysis. The bank uses low leverage, meaning it depends on more equity than debt. This lower financial risk and adds stability. A positive sign a positive sign for cautious investors. So as you can see, Commonwealth Bank is 4.8 equity multiplier, which means we're the lowest, and also loan to deposit ratio is 45.1%. Efficiency and performance ratio. Commonwealth Bank Limited efficiency ratio is around 62.5%, meaning it spends approximately 63 cents to make a dollar. That's a strong sign of cost control and effective operations, allowing more profits to be reinvested or returned to shareholders.
Continuing, we have our financial analysis. So for our financial statement analysis, we have several ratios of Commonwealth Bank from 2023 to 2024 and the percent changes between them. First up, we have our net income at $63.5 million in 2023 versus the $75.5 million in 2024 at an 18.9% percentage change. The return on assets in 2023 are $3.3 million versus the $4.1 million of 2024, leading to a percent change of 24.24%. The return on equity is 21.24 and rises slightly to 24.2 in 2024 at 13.94%. The earnings per share in 2023 is 58 cents versus the 30 cents in 2024 and suffers a negative percentage change of 48.28%. The dividend yield is $2.57 in 2023 for Commonwealth Bank and then rises a bit more to $3.76 at a 46.3% percentage change. Next, our efficiency ratio is 59.9 in 2023 and then rises slightly again to 62.5 in 2024 at a 4.34 percentage change. Lastly, for our liquidity ratio in 2023, it's 64.1 and continues to stay the same at 64.1 in 2024, leading to a 0% change. Continuing on to our intrinsic value, here we use the DCF, the discounted cash flow model, to determine the intrinsic value of Commonwealth Bank Limited's stock. So we have our 2024 net income at $85.9 million, shares outstanding at $291 million, and the assumptions that the growth rate is 5%, the discount rate is 10%, and the terminal growth rate is 2.5%. So these conservative inputs help us to avoid overestimating the company's value when doing this calculation. So as you can see from the projected net income, we projected it for the next 5 years, landing at $109.6 million at the end of year 5. And these projections assume stable growth and form the basis of the valuation that we will be doing. Continuing on with the DCF formula, we discounted the projected net incomes and calculated the terminal value. So as you can see, starting with the present value of 1 to 5 years, that leads us to $68.1 million at the end of the present value of net income for year 5, giving us a total present value for years 1 through 5 at $374.4 million. And putting into the terminal value formula, we have $1,489.3 million. Continuing on, the present value of the terminal value is 930.4 million. The total equity value is 1,304.7 million, which leads us to an intrinsic value per share at 1,304.7 million divided by $291 million, which gives us an intrinsic value of $4.48 versus the market value, which currently stands at $4.81 as of June 2025. And so this gives us a benchmark for comparing the current market price and forming our investment recommendation. Recommendations for investors. So currently, you should hold or sell your Commonwealth Bank stock as of June 2025, seeing as the Commonwealth Bank's market price is currently above its intrinsic value of $4.48, being at $4.81 currently, which means the stock is overvalued. If you are collecting dividends, it is recommended that you hold, avoiding new purchases unless the price adjusts or the earnings grow significantly. And you should continue to monitor the future earnings growth before you decide to buy in, or you can sell if you feel as though the stock price will drop soon. Recommendations for Commonwealth Bank. We have four options of recommendations here. First, keep strong dividend payouts for your investors. Second, improve the risk models, ECLs. Third, strengthen the ESG practices. Fourth, watch economic and climate risks and how it affects Commonwealth Bank and its investors. So these are the references that we used for our project today. In conclusion, I would just like to thank you on behalf of Group 1 for attentively listening to our presentation. We hope you enjoyed our financial analysis.